Okay, so when you hear the word accounting, what pops into your head? Spreadsheets, taxes, a bunch of complicated numbers? Yeah, I get it. But what if I told you it's actually the language a business uses to tell its own story? It's really all about its health, its performance, and its strategy. Let's dive in and see how it all works.
It really all boils down to this one simple question. You can't just go by gut feelings or, how busy the store looks. To truly, deeply understand a company's condition, you need a proper health check. And the main tool for that checkup? It's called bookkeeping.
So, at its heart, bookkeeping, or boki as it's known in Japan, where this stuff is practically an art form, is just a system. It's a way of measuring and recording everything a company does, but here's the key. It translates all of that activity into the universal language of money. It's the absolute foundation that lets us see what's really going on inside a business. All right, so we've done this health check. Now what are we actually looking for? Well, the results come back in the form of two absolutely essential reports. Think of them as the two most critical vital signs for any business out there.
This is probably the best way to think about it. The balance sheet, or the B slash, is like a photograph. It just freezes one single moment in time, say midnight on December 31st, and it shows you the company's exact financial position right then and there. Now, the profit and loss statement, or P slash, that's more like a video. It tells the story of how the company performed over a whole period of time, like the entire year. One's a snapshot, the other is a movie.
So let's crack these two reports open and take a look inside. What are they actually made of? Because understanding their anatomy is totally key to being able to read the story they're trying to tell us.
The balance sheet is built on this really simple kind of beautiful equation. See the scale? On one side, you have assets. That's everything the company owns. And on the other side, you've got liabilities and net assets, which basically show you where the money for those assets came from. And the most important part, just like this image shows, is that it always has to balance. Always.
So let's break that down real quick. Assets are all the good stuff the company has. We're talking cash in the bank, buildings, equipment. Liabilities, that's what it owes to other people, like a big bank loan. And net assets, well, that's the owner's slice of the pie. It's the money they put in to start, plus all the profits the company has kept over the years.
Okay, now let's jump over to the P&L, our performance video. If the balance sheet shows what a company has, the P&L tells us what it did over that period. It's basically a big face-off. Revenue, all the money the company earned, goes head-to-head against expenses, all the money it had to spend to earn that revenue.
To put it super simply, revenue is just your sales. Expenses are all the costs of doing business. Paying for materials, covering salaries, keeping the lights on. And the difference between those two is the whole ballgame, profit. That is the ultimate measure of how well you did that year.
So we've seen these big final reports. But how do they get built? I mean, where does the information come from? Well, they're constructed piece by piece from thousands of tiny individual transactions, and each one is recorded using a really specific and incredibly powerful system. Most of us are probably used to single-entry bookkeeping, even if we don't call it that. It's like a simple home budget where you just write down meat, 525 yen. Simple. But businesses use a system called double entry. And look at the difference. It doesn't just say meat, it says purchases and cash. It's capturing two sides of the same story. And this gets us to the absolute core idea. For every single action in business, there's kind of like an equal and opposite reaction. Double entry bookkeeping is built to capture that exact duality. It doesn't just record that you spent cash, it also records why you spent it. It shows what you gained and what you gave up in every single transaction.
Let's look at a quick example. Say you make a 1,000 yen sale and the customer pays you in cash. Two things just happened, right? First, your cash, which is an asset, goes up by 1,000. We record that on the left side, the debit side. At the exact same time, your sales, which is revenue, also goes up by 1,000, and we record that on the right side, the credit side. See? Two sides to the story.
And this right here is the golden rule. It's what holds the entire universe of accounting together. For every single entry, without fail, the left side, the debits, must equal the right side, the credits. It's this amazing, built-in, self-checking system that makes bookkeeping so trustworthy. It's kind of like its superpower. Okay, so now we can finally connect all the dots. How do these little individual double entry transactions, all these debits and credits, turn into those big, important BS and PL reports we saw earlier? Well, it's a very clear, methodical workflow. It goes like this. First, every transaction gets recorded as a journal entry, just like that sales example. Then, second, all those entries get sorted and posted into something called a general ledger. Just think of it like a giant filing cabinet with a folder for every single account. Cash, sales, you name it. Third, you run a trial balance to add everything up and make double sure that all the debits still equal all the credits. And finally, once you know everything is perfectly in balance, you use that data to build the final reports. And yeah, while we started with some pretty simple blocks, those exact same principles are used to build much more detailed and complex reports like these. You can see how the balance sheet on the left gets broken down into all these different kinds of assets and liabilities, and the P&L on the right details all the different ways you made and spent money. It might look intimidating, but I promise, the fundamental ideas, assets versus liabilities, revenue versus expenses, are exactly the same.
So, by following this careful process, from one tiny transaction all the way to the final statements, bookkeeping gives us this complete, balanced, and incredibly accurate story. It really is the definitive health check for any business, whether it's a tiny startup or a giant corporation.
And that really brings us full circle, back to where we started. These reports, they aren't just lists of numbers. They're narratives. They tell stories of ambition, of struggle, of innovation and success. They tell you where a company has been, where it stands right now, and maybe, just maybe, they can give you a hint of where it's going next. So the real question is, what story do you see?